Rupee is sliding to the historically low levels. The fall of rupee seems to be a continuous phenomenon. Even in 2026, rupee has sharply declined. At 11:30 on Friday, May 15th, the value of rupee compared to dollar is 95.83. So the time when I am recording this video. So the value of the rupee is nearing 96. There is no surprise if the rupee reaches the 100 mark also. This is rather unprecedented. I agree that the value of rupee has been declining right from the days of independence. But the sharpest decline has come during Narendra Modi's regime. So if you look at the last 10-12 years, that too, why I am telling sharpest is, when the Indian economy has grown to this level, well, in the past we were growing at a 3% growth rate, we were not so strong in technology, in exports, but this is not the economy which we had in the past. Today we have a great and robust economy. Our GDP is rising. Government always claims that we are the fourth largest, fifth largest, third largest. But I don't still understand why the value of rupee does not reflect the GDP numbers. So something should be wrong with somewhere. So let me analyze and break it down for you. What are the factors that are resulting in continuous decline of the value of rupee? The first factor is of course, there has been a decline in the past, and the decline is accentuated by the West Asian conflict, because we depend on oil, and oil dependency has increased in the last 10 years. In fact, in 2014, India's crude oil imports constituted, we were importing 77.6% of our crude oil requirements. Today it has reached 88.6%. Greater import dependency in the oil, coupled with the rising oil prices due to West Asian conflict, is a lethal combination. We are increasingly more dependent on oil from on other countries, and the price of the oil is increasing. Before February 28, 2026, the day on which America and Israel launched war on Iran, the price of the global crude oil was around $70 per barrel. Ever since the war has begun, it is always above $100, and there is no respite in the global oil prices. There seems to be no immediate solution to the problem. The war tensions continue to loom large, and nobody knows what will happen tomorrow. And a period of global uncertainty, period of geopolitical uncertainty, results in the increasing volatility in the oil prices, increasing the volatility in the value of rupee. So this is the first problem. So the war in West Asia has aggravated the problem, because India's import dependency in the oil sector has been increasing. Two, the current account deficit has been widening, the trade deficit has been widening. Well, the current account deficit is now around $13.2 billion, which is around 1.3% of India's GDP. Current account deficit refers to the gap between the dollars which we are earning and dollars which we are spending. So India is spending more dollars than what it is earning. So the reason for that is not just the growing oil imports. The gold imports are increasing. Since 2022-23, the gold imports have almost doubled, more than double. In fact, in 2022-23, India imported $35 billion of gold, and in 2025-26, India imported 71.98 billion, nearly $72 billion of gold. Not only that, the liberalized remittance, under the liberalized remittances scheme, So, for foreign travel, people were taking dollars away from India. So, as a result, there is an outflow of foreign exchange, causing widening current account deficit. So, widening current account deficit increases the pressure on the value of rupee. 3. The foreign investment is leaving Indian economy. Since January, I think around 1,95,000 crores worth of foreign investors in rupee terms went. So, nearly $20 billion of foreign investment has left the Indian stock markets. So, why are they leaving? Well, not even a foreign investment, even the net day outflow is also not encouraging. The foreign investors normally leave emerging markets in search of safer havens in the periods of geopolitical and geoeconomic certainty. So, given the West Asian conflict, given the geopolitics and geoeconomics earlier due to Trump tariffs, so the foreign investor is going to the dollar denominated assets, because that is a normal phenomenon that happens. So, these foreign investors are often described as footloose capital or butterfly capital. That is the third factor. Then the fourth factor is the widening trade deficit, not just on oil. We are importing much more than we are exporting. The reason for that is as due to Trump's trade war. So, exports have been hard hit. In several sectors, it has become very difficult to sell around the world. So, there is a global trade has been hard hit by the Trump's economic policies. Then the fifth one is, as a result of the war, dollar is strengthening. In fact, the rupee declined even when the dollar was declining in 2025. 2025 was the worst year for the dollar. The price of the dollar was coming down. Still, the price of the rupee has also fallen. In 2026, dollar is actually strengthening. Today, rupee is the Asia's worst performing currency. Why the dollar increases? So, during any period of war, the demand for weapons increases, and of course, the weapon market is essentially in dollars. Demand for oil has increased, oil prices have increased. Well, oil prices are traded, oil is traded mostly in dollars. There is of course the non-dollar trade in oil sector also. Gold trade has increased, and the gold is traded in dollars. So, in the hour of geopolitical crisis, during especially the war, the demand for dollar actually increases. So, therefore, the factor here is the dollar is strengthening. So, when dollar strengthens, that will have a further impact on the value of the rupee.